Alex entered the world, a canvas pristine and untouched. But even then, before the first cry echoed in the hospital halls, an invisible ledger began. A digital whisper, a potential. For the architects of capital, Alex was not just a child. They were a future data point, an unwritten equation waiting for variables to be plugged in. The game had already started, silent and unseen. Years later, a young Alex, full of youthful ambition, held a shiny plastic card, the first credit application. The bank's offer seemed a handshake, a promise of freedom. "Congratulations, Alex, you're approved." The words sang, not of debt, but of possibility. It felt like an earned key to a world of desires, a ticket to independence. Initial rates were seductive, almost generous. Alex paid bills on time, a diligent steward of this newfound power. The algorithm in its cold calculus rewarded this compliance, a higher score, a lower risk profile. It painted Alex with a golden halo, deeming them worthy of greater trust, greater access. The roar of a new engine, the gleam of polished chrome. Alex bought their first car. The loan application was a breeze, the monthly payments a minor toll for the exhilarating taste of freedom. It wasn't just metal, it was autonomy, a tangible reward for good behavior in the invisible score system. Then came the biggest dream, a home. The mortgage application felt like a rite of passage, a declaration of adulthood. Every past financial decision, every late payment avoided, every credit card statement meticulously paid was now being weighed, scrutinized, distilled into a single decisive score. Approval, relief, joy. Alex stepped over the threshold, believing they had earned this victory. But the algorithm saw deeper. It saw the debt-to-income ratio, the interest rate locked in, the subtle clauses, the unseen strings. It saw a lifetime of payments, a predictable revenue stream. Alex was not just a homeowner, they were an asset in its vast, intricate portfolio. Life, as it often does, threw curveballs, a minor medical emergency, a car repair, small, unexpected expenses that chipped away at the margins. Suddenly, paying the credit card minimum felt like a victory, not a path to payoff. The bank's automated messages shifted tone, subtle, almost imperceptible. 1 month. Just one. The payment slipped. Buried under a mountain of new responsibilities, it was forgotten. A small oversight, a human error. But to the algorithm, it was a data point, a deviation, a signal, a flicker of doubt in Alex's otherwise stellar record. The consequences weren't immediate, not overt. But they were there, invisible scars on Alex's financial profile. A car insurance renewal rate inexplicably higher, a new credit card application summarily denied. No explanation, just a cold digital no. The doors that once opened effortlessly now resisted. Another late payment, then another. The interest rates began to creep upwards, almost imperceptibly at first, then with a steady, relentless climb. The minimum payments grew, but the principal barely budged. It felt like running on a treadmill, the speed accelerating, the finish line receding into the distance. A company layoff, a sudden brutal severance. The ground beneath Alex's feet gave way. Savings dwindled, the buffer zone evaporated. The carefully constructed financial stability, years in the making, crumbled under the weight of unforeseen circumstances. Panic set in. The phone calls started, automated reminders, then human voices, firm and insistent. Each ring a hammer blow, each letter a tightening of the invisible chains. Alex felt a heavy cloak of shame, isolation, and fear descend. The algorithm, devoid of empathy, only saw risk rising exponentially. Desperate, Alex sought consolidation loans. The promises were alluring, one low monthly payment. But the rates offered were predatory, designed for those already in distress. It was not a lifeline, but another knot in the noose, tightening slowly, surely around Alex's financial future. The mortgage, once a symbol of achievement, became a source of dread. The house, once a sanctuary, now loomed like a monument to what was being lost. Foreclosure papers arrived, cold and official. The dreams Alex had built within those walls were being repossessed, one digit at a time. Rock bottom. But in the quiet aftermath of loss, a chilling clarity emerged. It wasn't just bad luck, it wasn't just personal failure. It was a system vast and impersonal that had priced every decision, every misstep, every aspiration. Alex began to see the invisible hand, guiding, sometimes crushing. Who were these architects? These unseen hands pulling the strings? Alex began to research, devouring articles, obscure forums, understanding the language of FICO scores, risk assessment, behavioral economics. The veil began to lift, revealing the intricate dance of data points. This wasn't a punishment, it was a game with rules Alex had never fully understood. Now, with newfound knowledge, a resolve hardened. If the algorithm could price life, Alex would learn to price back. The path to redemption would be deliberate, strategic. Small steps, a secured credit card, payments meticulously made, every single one on time. Each successful transaction, a tiny chip away at the digital mountain of past mistakes. It was slow, frustrating work, but Alex felt a flicker of control, a spark of defiance. Budgeting became a sacred ritual. Every penny accounted for, every impulse purchase denied. It was an austere path, stripped of luxuries, focused solely on solvency. The whispers of temptation were loud, but the resolve to escape the algorithmic prison was louder. Months turned into years. The credit score, once a scarlet letter, slowly began its silent ascent. Loans became accessible again at fairer rates. The interest burden lightened, allowing more to go towards principal. The digital shackles, once so heavy, began to loosen. Alex no longer feared the algorithm, Alex understood it. Every financial decision was now a calculated move, a step in a complex dance. Credit cards used sparingly, paid in full, debt strategically managed. Alex wasn't just a consumer, they were an informed participant, manipulating the system's own logic. The whispers of the financial world, once a source of anxiety, became a language Alex could speak. Understanding the nuance of credit reporting, the impact of inquiries, the power of utilization ratios. Alex was not just a player, they were becoming a master weaver of their own financial destiny. Retirement, not a forced retreat, but a chosen horizon. The numbers in the bank's algorithm now reflected prudence, stability, wealth. Alex had not merely survived, they had transcended the initial pricing, rewriting their narrative one disciplined choice at a time. The system still existed, but its power over Alex had diminished. Alex found a new purpose, guiding others, sharing the hard-won wisdom, revealing the invisible mechanisms of financial control, teaching young, eager hands how to navigate the algorithmic currents, how to read the silent signals, how to avoid the hidden traps. Yet the algorithm never truly disappears. It evolves, learns, adapts. It watches every transaction, every search, every decision. The battle for financial autonomy is eternal, a constant vigilance against the unseen hand that still attempts to price every life. For all its complexity, the algorithm remains a tool wielded by human hands, fed by human choices. Our resilience, our capacity to learn, to adapt, to defy expectations, these are variables it struggles to fully quantify, emotions it cannot compute. Alex's life was not just a